Folks, Black Bull Markets have 10 merch packs to give away to clients who sign up before the end of the year, including one of these trader keys. So to go in the draw, all you need to do is sign up with the link below this video or in the podcast description, and you'll go in the draw to win. It's that simple. And remember, folks, when you sign up to Black Bull Markets through the Trading Nut link below, you're going to get a 100% deposit bonus up to $1,000 on your first deposit. All you need to do is click the link in the description below the video or the podcast.
Hey, what's going on, guys? This is Brinks Trades coming to you live for another week of breakdowns. Hope everybody had a great holiday, great Thanksgiving. And so, yes, time to get back to the charts. So, again, as always, shout out to the Trading Nut platform for giving me the opportunity to come on and break down trades for you guys, or break down market outlooks for you guys. And, so far, hopefully everybody's been enjoying, the breakdowns that I've been doing over the past month or so. We've been pretty accurate with our projections, and so hopefully we can kind of continue this going into the next year. So again, as always, I'm going to touch on the three major indices and then also do analysis on the dollar index, just because I use that as a framework. So US30, which is Dow Jones, NASDAQ, NAS100, and US500, which is the S&P. So we're starting with the dollar index again. So we know that going into the holidays, going into the late fourth quarter, so that November, December, there's, the market's going to be pretty slow, right? And, every once in a while you see, or every couple of, weeks or so, you might see a huge day with volatility. But for the most part, we know that the fourth quarter time is going to be very slow when it comes to actually day trading and looking for positions. So, one thing that we're looking for is really to see what the dollar index is going to do over the next month or so, going into the holidays, going into the new year, and really kind of start, game planning for 2024. So if we look at the dollar index, starting on the higher time frames, again, so, I still have this target mapped out, which is a monthly fair value gap, or a monthly level of a monthly target level that I'm looking for the price to eventually hit. And so that's all really going to depend on whether or not we respect this monthly fair value gap here. So in the next week or so, I believe we have like another week left in the month, or by this time next week, I just want to see if we close and if we respect this monthly fair value gap, as I noted right here. And so if we do respect this, so if we see next week just, price action close the month above this fair value gap, then I'm going to be looking to continue on with this bullish bias. And if the month closes with this level, violated this fair value gap, not respected, then I'm gonna, for a while probably get rid of this long-term target and look to continue on with this bearish bias. And that could be, the re-entry of this fair value gap here, or these lows, or particularly this low, or this wick is what I'll be targeting. So it'll kind of shift my bias going into December and January for the next year. So as of last week, just like last week, we're kind of sitting on our hands. We did have a huge rejection. If we look at the weekly candle, the last couple of weeks have been hugely bearish projections trading into back to these levels. And so we're really just kind of waiting and seeing. And so again, as of right now, I will still hold that long-term bullish bias. I still think we could come back to this area, but again, that will be prevalent on how we close the week next week. So if we get a close, that respects this fair value gap, then I'll still be continuing on with a bullish bias. And that means, with indices, that I should be holding a bearish bias. And with Forex, depending on the pair, with the major pairs with the USD and as the secondary, I'll obviously take in the inverse of this. So I'll be bearish on those as well. And bullish on pairs that with the USD leads, like USD JPY or USD CAD, right? So really just kind of sitting on our hands. And again, the majority of trading is going to be analyzing, right? It's not going to be actually taking a position. And so when we do take a position, we do want these confirmations aligned, right? And so let me go to the comments really quickly, just make sure. Yeah, I mean, it's kind of, Martin says coin flipping, right? I mean, we're kind of just waiting to see, right? It's it's, not necessarily coin flipping, but we just kind of have to wait and see. Once we don't want to gamble, right? We want to take the highest probability setups. And again, that's the majority of trading is just waiting for the highest probability setups. So if I can call both sides of the market, then I usually don't want to take a position. And that goes from my higher time frame analysis all the way down to my like actually entries. If I can put myself on the other side of the trade and say like, how would I fail? Then, or how would this go against me? And if I can accurately make that case, then that's not a high probability setup for me. So I don't want to take those positions. So yeah, if we go to the weekly time frame, or if we go to NAS100, again, let's start at the weekly time frame. We don't have to go as high with that. But last week, we wanted to see, let me go down to the daily because I think I had my projections on here. But last week, if we zoom in, just due to the holiday, I didn't call a big run. And so what we were really targeting is this green area, which is our weekly fair value gap and our weekly target. And so last week, we wanted to see price trade into this zone. And so if we go to the weekly time frame and go back to last week, just so we can kind of see what we were looking for, we wanted to see price give us some rejection back into this area, and then look for price to go long. Ultimately, looking for price to hit this fair value gap, and that's exactly what we got. So if we fast forward over the past few days, we didn't go as low as this fair value gap, and I thought maybe we could retest this zone. This is a 4 hour fair value gap inside of a daily fair value gap. And so we pretty much got a rejection or got a move straight to that target level. And since then have rejected and, haven't really dug deeper into that level. And so for this week, I'm going to be kind of watching things. I don't want to continue to trade into this because this is like kind of our long-term target, or not long-term target, but this is kind of like a higher time frame target. And so, what I want to do is just kind of see, are we going to respect this level or are we not? So again, a lot of this analysis that we're going to see over the next few weeks is really going to be us kind of sitting on our hands and waiting for good setups. And so, if we get, what I'll be looking for is for price to reject from this level. Ideally, I want to see some form of sell side liquidity grab to match up with this buy side in here. And so that could either be at these lows or in this fair value gap down here, some sort of sell side reaching for. And so if we don't get that, well, let me backtrack. What I would like to see is some sort of rejection. We could tend to go higher and just there's no, I don't like calling tops and bottoms on trends. And so if we get continue, we could see continue digging into this fair value gap. But what I'm looking for, I won't take any buy positions once if we trade back into this, because this is kind of our long-term target. What I'd like to see is price kind of trade through this. So if we're trading through this fair value gap at 16,290, then I'll look to continue looking for buy side targets, which would be if I could find my tool, there we go. If I'll be looking at 16,590, 584 as a target. And let me get rid of this just a little bit. Okay. Yep. 16,579 is a target. If we continue to trade through this, would be the target that I think price would be reaching for. If not, because we are at kind of like a target level. If we get a rejection here and we get a break of structure, at 15,745, then this will kind of like invalidate any more bullishness. And I'd like to see price continue to fall over from there. So anytime we tack a new level of a buy side or targets, I guess in this case, either buy side liquidity or re-entering like an old fair value gap, then we want to see price kind of, price always has the opportunity to give us a rejection from those levels. And so kind of like a liquidity sweep and break in the opposite direction. So I'm kind of watching a few different things this week. And again, I guess full disclaimer, I am done trading for the year, right? So like I've made that known over the last few weeks that, November, is usually the last month that I trade, just because due to the slow volatility. So we could see consolidation, we could see slow market momentum for the next 3 or 4 weeks. And so that's just, me from an emotional standpoint. It's not the type of price action that I want to be in. And so, again, so like, I guess going back to the point though, I want to see price, see what happens if price is going to continue to dig deeper into this fair value gap. There's certain levels that I'll be looking for. The midpoint of this gap, which will be 16,152, the upper end of the gap, which will be 15 or 16,298. And then if we do start to break through those levels, then ultimately I think we're going to be reaching for this buy side there. I'd like to see bearishness though. I'd like to see price reject from this level and continue to go lower. But again, I've lost a lot of money trying to call the tops and bottoms on trends. So I will continually move with the bias until market price action tells us that we've reached the ultimate level of liquidity, and we'll know that happens. We'll know that will happen when we see like a break of structure in the market and, confirmations, going the other way. So with that being said, again, a lot of the price action is just going to be wait and see for the next couple of weeks. So if I'm gonna bias on this, it's going to be NAS100 bias. The best case scenario, we bearish because we've grabbed, we filled in an old fair value gap, took out buy side liquidity, right? So we want to see bearishness in the market, but we also don't have a confirmation for a bearish market yet. So we're still waiting. We need to kind of see like a market structure shift, right? So we haven't had that happen yet. So what I'll be waiting to see over the next few days of the week is if we get that, then I'll look to go lower. I won't be buying this anymore. This is our target. So I'll just be sitting out and kind of watching and waiting. So I'll be waiting for a bearish shift, but ultimately we still could see bullishness because we haven't gotten the final confirmations that the market structure is about to shift. So, so best case scenario bearish, on the look for a continued bullish bias. Bullish momentum, let's call it that. Same thing with US500, right? So last week we wanted to see, again, price action attacking these highs and really giving us a reason to kind of go for this buy side liquidity that was sitting at, let me go back up to the weekly. This buy side liquidity that was sitting at 4,056, and we pretty much hit that on the dot and really hit that level, and pretty much ended the week at that high as well. So if we go back a week, again, this is what we wanted to see. There's a couple of overlapping. We took out, we filled this old imbalance, sell side imbalance, and we gave us really, pretty much a balanced price range. And so what I wanted to see again was a continued bullish momentum, most likely reaching for this high. And if we fast forward again, let me get rid of this, one of these. This is exactly what we got, right? So we attacked that high, grab buy side liquidity, and then it's pretty much where we ended the week. Again, short week because of the holiday, not a lot of momentum towards the later half of the week. So what I'll be looking for again is, price has really kind of been held. It's tapped liquidity, grabbed liquidity a few times over this high. I would, in the ideal scenario, I would like to see price give us a reason to go short. So potentially even grab liquidity retesting these highs of last week and then looking to go short. But we don't have that confirmation as of yet. We won't really know what that's looking like until like Monday, the Monday timeframe, right? After the market, we get the first day of market action to see what's going on. And so as of right now, I would like to see, just like on S&P, or just like on Nasdaq, I'd like to see bearishness because we've kind of hit a level of target, but we also don't have any confirmations for a bearish trend yet. And so, um, again, we'd like to see, breaks of market structure on this daily and weekly time frame. We'd like to see, um, any type of like bearish sentiment, as far as, smart money trying to grab liquidity to go the other way, right? And so we haven't seen that yet. And so if we get that, then I'll look to be looking, I'll look to go short, right? But as of right now, there's technically nothing that tells us that we couldn't keep going higher. And so that's, again, this is going to be the analysis on a lot of these pairs. Once we hit a long-term target or a short-term target, but a higher time, anything on the higher time frames as far as the target goes, we have to be out of the market and we have to let the market kind of give us the new setup, right? And so, um, like when I was talking about a few weeks ago, I was talking about NASDAQ and us hitting this longer term target. Once we hit these levels, right? Like this was our weekly target from like our quarterly target from this past quarter was this fair value gap down here, right? And so once we hit these levels, we have to be out of the market and just so we can get a clear bias on what's coming next. And that's kind of where we're at right now. So we got to see if the market respects these levels that they've just hit, and see if that was kind of like the ultimate level of liquidity that we were reaching for. Um, same thing with S&P. Again, we don't really have a bearish sentiment in mind. I'd like to see bearishness, but we don't really have a full out bearish idea played out yet. So I could see price action going as high as 4,597. And if we do start to not respect these levels, not respect this level, the buy side that we just have taken, that'll be the next level that I'm looking at, is that 4,598. Hey, what's up, guys? Sorry about that. It looks like we had a little technical difficulty with the screen here. If you guys can hear me, put a chat in the put some chat comments in the chat box, and we'll see if you guys can still hear me at all. Um, yeah, that was weird. I don't know what happened. Okay, so yeah, so I'm going back live again. So again, put some comments in the chat box if you can hear me. But again, so want to just touch on again what I was saying with the S&P. Uh, so we're looking for a next level of buy side liquidity potentially get hit at this high. Again, I'd like to see price reject from this level, but again, we don't call the tops or bottoms in the trends. And so what we're looking for is the market to really give us an idea of what the next objective is once we hit a target. So if we go down to the 4 hour time frame, again, if we start to see the buy side liquidity get taken over these highs at 45,080, and we could potentially predict, the price to go down. So what I'll be looking for E-mini S&P is um, I'll be looking for the E-mini S&P to um, potentially go higher. If we take out this level of 4,536, then I'll most likely be changing my bias to a short-term bias and looking for short-term opportunities. But that's really if that's kind of a wait and see game. Again, like I mentioned a couple of times already today, most of the analysis for today is going to be a wait and see if we get what a kind of where the market's leaning at since we've already taken a level of buy side. And so we'll know that, over the next week or so. And one of the reasons, again, why I personally don't take any positions during the fourth quarter is because this market is going to it's not going to move as fast going into the holidays. Big banks, big hedge funds, institutions, they're going to be going on, winter break, right? Or their winter vacations, ending their year. So there's not going to be as much volume in the market. And so, excuse me. One thing I try to do is stay out of the market during low volatility times because that is, just leads to bad emotions when trading. You try to project moves that haven't happened yet, try to over anticipate the market and force your will in the market, and that never works out, right? So again, what I want to see here is price looking at US 500. Um, same setup again. What I'd like to see is price potentially give us a reason to reject from this level. If we don't get this, if we go down to our weekly time frames and our 4 hour time frames, if we start retesting old levels, um, potentially even if we zoom in, um, yeah, again, if we look to take out this level here at 4,524 on the US 500, so it's not the S&P, then we could potentially start to see a short-term bias or a short-term rejection and bearish momentum. So on the top side, this will be the next level of buy side liquidity that I'm looking for. And so we'll know pretty early in the week, right after that Monday, Tuesday timeframe, which direction the market's heading in. And so again, I want to be in the market during situations where there are going to be high probability setups. And so that half of the action of as being a trader is really just staying out during the times of year or the times there's going to be low volatility. Same thing here. I think Dow Jones, again, the reason that I analyze a few of these markets is because um, they kind of each of them can kind of give me the individual clues as far as to what um, the overall market may or may not be doing. And so, at the Dow Jones, we're seeing a little bit of a different take on what the markets are doing. Um, and so, if you look at the last two markets, the Nasdaq and the S&P or US 500, they both kind of hit their level of liquidity, and it just kind of consolidated for the week. But Dow Jones actually gave us something different, right? And so, Dow Jones, the target that we had called out for last week, if we go to the weekly time frame. Let me get rid of some of this stuff. Um, the target that we had called out on the monthly time frame was actually this fair value gap here, right? That was at 31,160. And so if we go into last week, I had made note of a couple of things, but I made note that that daily fair value gap is the level that we wanted to see hit, right? A lot of liquidity, built up just under this gap. So I wanted to see price come in and retest these levels, right? And that's exactly what we got over the first few days of the week. We hit that level on Monday, and then price hit that level, consolidated, and again retested it again. So with with the Dow Jones or US30, we're getting a little bit of a different story, right? We're seeing that price wants to kind of go for higher levels of liquidity. And so that might kind of be like the code breaker, or like the break cracking correlation, right, between all of the pairs, that are kind of letting us know that, hey, there's more liquidity that we're going to be grabbing at the top. And so what I'd like to see again for Dow Jones is going to be a little different. This is actually going to be more of a definitive bias, or a definitive bias for this pair, or for this chart. And so what I'd like to see is, price give us a reason to attack this level, right? And then look for higher liquidity. The first level of liquidity I'm going to be looking at is 35,344, right? And then the second level is going to be uh, this buy side liquidity level at 35,390. So because Dow Jones is actually giving us kind of more of a definitive reason to go higher, we could end up actually seeing higher prices on NASDAQ or on the S&P. I would say out of all of them, this is probably the safest one. I don't want to say safest one, but like the one that I would feel the most comfortable taking a position on for this week for bullishness, or any market direction. And so I would like to see prices go higher in this, just because we did not respect this fair value gap at all. We've actually continued to form new higher imbalances going higher. And so um, if we get to the week, the later half of the week, the Tuesday, Wednesday, Thursday time frame, and we're trading under this imbalance, like well under this imbalance, we don't respect it, then um, I would again consider, this lining up with bearishness along with the S&P and the Nasdaq. And so one thing that I talk about to my students all the time is the idea of correlation, and basically, certain markets should be aligning themselves, and really, when one pair does or doesn't, it could signal a crack in correlation between all of the pairs, which could lead to long-term reversals. And this could be it, right? We could just be digging deeper on Dow Jones because there's another level of liquidity that we need to get that isn't necessarily there on NASDAQ or US30. And so we'll know more when the week starts. But again, as of right now, if I was looking to continue the bullish bias, I wouldn't feel comfortable looking for buys on Nasdaq, and I wouldn't feel comfortable looking for buys on S&P, just with the current price action. But I would, this out of all three, I would look I would be more comfortable looking for buys on Dow Jones, because of what it's given us, a lack of respecting previous levels, as well as forming new imbalances that we know price is going to trade into. We go to the 4-hour time frame. Again, we know that this whole zone is daily. So if I had to kind of narrow this down just a little bit more inside of this already 4-hour, or I'm sorry, daily imbalance, I would be looking at a few levels. The first level is these lows here, these relative equal lows at 34,243, which also line up with the top of that daily gap, right? I would also be looking at the consequent encroachment of this wick as well. So these are the two levels that I would be looking at, really inside of this fair value gap. And so those two levels are at 35,237 and 35,217. So I'd like to see, in the best case scenario, I'd like to see price, attack one of these levels before it, goes back up. Right. So something like that is what I would like to see in the best case scenario, really grabbing sell side liquidity underneath here. underneath these lows or respecting that consequent encroachment level, and then taking off and going the other way. So that's what I would be looking for. If I had to pick a pair this week, it would definitely be the Dow Jones or US30 because of what's going on. Again making uh, the disclaimer that I'm not personally trading this week. And then again, also I only take setups on NASDAQ. For me, my personal trading is just a personal thing. Doesn't necessarily mean that you don't. I know a lot of people like to trade US30, but that's just what I would be looking for. I personally only trade NASDAQ. It's just my go-to pair. I call it superstition, right? So yeah, so that's what all of what I'll be looking for this week. Again, I want to apologize for the stop in streaming. I'm not sure exactly what happened, but uh, again, dollar, it's kind of a wait and see. Nasdaq again waiting to see, but leaning towards a bearish bias. And S&P wait and see. So we're kind of waiting to see on the majority of these pairs. The only pair that's really kind of giving us buy signals, which again could signal that we're gonna be digging deeper, a little bit deeper on Dow Jones, is is Dow Jones. So I'd like to see a bullish momentum continue on that. I'm not going to call out any targets for Nasdaq or S&P just because I don't want to call out anything that I'm not 100% sure on or have a high probability of being sure about. So if you're trading US30, you might be in luck this week. I'd look to continue the bearish or the bullish bias. Again, target levels will be the high of last week, which would be this initial high at 34,343. And then we'd ultimately want to see price take out the 35,394 level. If we hit the consequent encroachment levels of this wick or this wick, and we start to not respect it, which, yeah, we haven't really hit that yet. So if we hit consequent encroachment and we don't quite get to this target, that might also be a signal that we're going to reverse. So again, and this is what end of the year trading looks like. It's going to be slower. It's going to be choppy. It's not going to be as much market, momentum, just because there's not going to be a lot of volume in the market. So, you can either look to take this time of the year off from trading and just kind of get your mind right for next year, or you can be very careful and take very high probability setups and when they come. So that's why I'm not giving targets for Nasdaq and S&P, just because if I was personally trading, I wouldn't feel comfortable looking for higher targets and or looking for additional targets since we've hit it. So if I was leaning one way, again, I'd like to see bearishness, but we don't have confirmations for that yet. So I wouldn't be surprised if we did dig higher on all three, US 500, 100, and US30 as well. And then just in case I was cut off earlier on US 500, again, 4,600 would be the target level if we did go higher. That's where I'll be looking to continue to go long for. So we'll know again pretty early in the week, if we are going to reverse off these levels. We did consolidate. So if we are going to reverse off these levels, we'll know pretty quickly in the week, Monday, Tuesday. But yeah, I wouldn't force any setups. I'd make sure that your setups are coming to you very clear and concise, and just be ready for the month of December trading because it's going to be slow and choppy. So hopefully you guys, this helps. If you have any questions, let me check the comment box really quickly. Yeah, buddy. So yeah, it's exactly the momentum and the feeling that I have right now for fourth quarter December trading. Yeah, buddy. Right. So if you guys have any questions, again, please, follow me at Brinks Trades. I'm going to drop the comment in the box. Follow on all platforms at Brinks Trades. So you can follow me there. And then I'm also going to drop the link to my Telegram as well. So in my Telegram, I do free analysis for anybody that is interested. no, that doesn't cost anything, but basically I just give updated analysis and my thoughts in the market, um, as well. Updated analysis throughout the week. So, obviously stuff might change between now and then. And so basically, I just use that as a free public forum where everybody can just come and see my updated analysis, because again, like the weeks like this, we're waiting on stuff to play out, right? We're not 100% sure. Um, we're not 100% sure uh, where things might play out. We could see prices continue to go higher. We don't want to call the tops in a trade, so we could see prices go higher, but we are at levels where we've hit liquidity and we could be seeing potential reversals in the market. So we're kind of going back and forth, right? And so, usually what I'll do in my chat is I'll update analysis throughout the week, just kind of based on what we're seeing. So again, if you guys want to check it out, I'll drop the link in here. A lot of good analysis. I usually throw a lot of my stuff on there too. So boom. And I just dropped that in the link. If you guys have any questions, feel free to message me on Telegram, on any social. Hopefully this helps. Hopefully you guys are getting a lot of value. And if you are, come back to this video, like the video, throw some thumbs up, and we'll keep it moving and rocking. So we'll get through this fourth quarter and we'll get to greener pastures in January. So hopefully guys, this helps, and catch you guys next week. Thanks.